So Dennis, what is your answer? It was a long question, but to this market obsessive focus on the Fed, and are we missing the ball, or is this the way it is?
I think we're looking at the wrong ball. I think we've done I think the Fed has become far too ubiquitous in its importance in the world, and I think we should make it try our best to limit it. When I first got into business in the 1970s, we used to watch the Fed to see whether they did a stop out on the overnight Fed funds rate or whether they did a stop out on a repo or a reverse transaction. And you didn't know for days whether the Fed had actually eased or tightened. The Fed
Hmm.
didn't issue any statements at the time. We didn't. Very few people knew that there were voting who the voting members were on the FOMC committee at that time. And I think we've given far too much importance, put far too much importance upon the Federal Reserve at this point. I think, on balance, I long for the days of the 1970s and early 80s when the Fed was a far lesser important circumstance than it is now.
Hmm. Yeah, I just thank you for the answer. We're obviously not getting back to that anytime soon. It doesn't seem, but I think it's important to
It'll
still
be a long time
talk
before
about
we
it.
get back to that. Yeah, it'll be a long time before that happens.
One
I'll
of the
be
other
long
aspects I
gone.
wanted to get, one of the other aspects I wanted to get your views on. It happened obviously a couple of weeks ago. The market was down significantly. It was quite violent in terms of the quick move, and it was this yen carry trade. And it doesn't surprise me that there's still so much leverage in the system. Again, I covered hedge funds when there was a lot of leverage, and that was, of course, during the 2008 financial crisis. And people think, oh, everything's safe and fine now, and it's not. And I want to get your perspective on what we need to know about how much leverage is in the system, and when something happens, this unwinding of trades, and also too, for our viewers, don't get too worried about it. Maybe.
There were years of winding up of the yen carry trade. People were borrowing in yen and investing elsewhere around the world, and that went on for a decade, at least a decade. And so you have, I
Hmm.
think, a year or more of unwinding of that trade. We've seen the first throwing up of the hands, the puking on a position at this point. But I think there's still quite a bit that is left to be done. The monetary authorities in Japan are now in the process of tightening monetary policy and letting rates rise over there, and that's going to unwind. That's going to cause a consistent unwind in what I think remains of the yen carry trade. We've probably cut it down by 70%, but I don't think we're anywhere near finishing the demise of the yen carry trade. There's a lot left, a lot more to be unwound. So as the Fed allows interest rates to decline here in the United States, and the Bank of Japan allows rates to go up over there, the unwinding of the yen carry trade will continue for, I think, some while into the future.
And Dennis, I always try to encourage people to learn how to invest, get invested, learn about the markets. And then when people see something like that, they might not know what a carry trade is, but they see the violence in the market, and then they just think there's leverage in the system and that it's a rigged system. And I don't agree with that, but people do get fearful. So what do you say to young people or anybody that you want to encourage to be in the market, and yet they see this happening, this leverage in the system that exacerbates the moves?
It's a matter of age. If you're my age, 74 years old, you should be fearful of what can happen and the fact that prices can decline, the stocks can go down 10, 15, 20% in the course of 2 or 3 years and do material damage to your net worth. If you're 50 and under, the fact is that stocks over the long period of time go from the lower left to the upper right. And you should applaud when we go down 10 or 15%. You should be a buyer of stocks. But if you're my age, you should be fearful that 10 or 15% decline in your portfolio does damage to your net worth and does damage to your retirement circumstances. So to me, it's a matter of age rather than a matter of volatility. I think we're going to be in a world of greater volatility, not lesser. I don't think we're going back to the 1950s or 60s. I think the volatility that we've seen in the last month and a half will be with us for a long period of time going forward.
Hmm. And that's great perspective in terms of just looking at some of the moves and the volatility in the market. It depends on kind of age and stage of life. So, with respect to expecting more volatility, what does that lead you to want to own? And we'll pick it up on the other side of the break as well. But are you buying the VIX?
Actually, I bought the VIX 2 weeks ago, sold it earlier this week. Didn't get the highs, but did okay. I bought the VIX because I thought volatility was going to increase. So buying the VIX over the course of the next year or two, I think will make sense, especially after the decline that we've had in the past week and a half. I'm actually, for my own account, buying SDS, which is a bearish trade this morning. I put that on today for the first time in a while. And if you're going to be long, you want to own consumer disposables, the things that you need. The Procter & Gambles of the world